My name is Ricardo Baca. I started a website called The Cannabis years ago, and now I run an agency called Grasslands, one of your MCs for New West Summit. Very psyched to introduce this panel. We're here to discuss emerging markets, and when I look at the gentlemen on this stage, I can tell that this is already going to be a panel worth sitting in on. So I'm just going to pass it along to my friend Chris, and we'll get moving. But thank you very much for joining us today. Hope you enjoy yourselves and are getting a lot out of this experience. I know I've seen some really fantastic panels today and yesterday, so let's move forward.
All right, thanks everybody. So I'll have all the panelists introduce themselves here momentarily. My name is Chris Crane. I'm the president and co-founder of Forefront Ventures. We are a multi-state operator in the cannabis space. We operate cultivation, production, and dispensaries with a real focus on retail. We also have a consulting business, Forefront Advisors, been around since 2011, and I've spent most of my career, or all of my career, working on cannabis issues, primarily in policy. Originally, it was with NORML for 6 years. I was the executive director of Students for Sensible Drug Policy, so I've sort of made that conversion from advocacy into the industry side of things, where I've been since 2009. Before we introduce everyone, I did want to just acknowledge, since I've got a platform here for a moment, what's going on outside the hotel. I know there are a lot of people that have that sort of struggled with whether or not to cross in and come into the hotel. New West clearly is not the target of the protests, but still does not take away from what's going on out there. So I would just encourage folks, as we are coming in, to acknowledge the people out there. Don't look away. Smile, talk to them, and it'd be really good to get a sense of why they're out there, because this is a really important issue, and these are folks that are really struggling to make a living wage. And just want to acknowledge that while we are here, and there are people out there that are sacrificing. So with that, let's just we'll go down the list here of everybody, or go down the stage here. Everyone can introduce themselves, who they're with, and then we're going to kind of run this Q&A style. So I'm going to ask a bunch of questions. Shameless plug alert, I'm a co-host of a podcast called Marijuana Today. So we're going to kind of run this maybe podcast style and make it more conversational. Before we do that, let's hear from everyone on the panel.
Excellent. Thank you, Chris. Appreciate it. My name is Yoni Meyer. I'm a partner at Casa Verde Capital. So for those of you who don't know, Casa Verde is a venture capital fund operating in the exclusively in the cannabis space. Primarily, we're investing in the ancillary ecosystem. So that's kind of like the picks and shovels that are supporting our space, be it technology, services, and so forth. We've got 15 companies in our portfolio, and yeah, very happy to be here.
Hi. Hello. Hi, my name is Peter Vogel. I'm a CEO and co-founder of LeafWire, and we are a relatively new online platform that connects investors to cannabis companies. And I myself am relatively new to cannabis. I've only been in for about a year. But in the last year, I have spoken with hundreds of different private companies that are trying to fundraise, and also hundreds of investors at the same time. So I've gotten a lot of feedback and insights from companies that are kind of struggling to raise, and seen a lot of trends over the last year. But I am relatively new to cannabis, coming from the tech world.
My name is Alan Brockstein. I'm based in Texas, and I do two things. First, I run 420 Investor, which is a little bit over 1,000 subscribers, and the service is dedicated to doing due diligence on publicly traded stocks, which is getting harder and harder. There's so many of them. And I've been doing that since 2013. And in 2015, I launched New Cannabis Ventures, which is, the way I like to say it is, it's not necessarily the best, but it's the most widely read financial media site, and what we try to do is filter a lot of the news, the noise out there. That's New Cannabis Ventures.
My name is John Downs. I'm the Director of Business Development for the ArcView Group. We are the country's first and largest investor network focused exclusively on cannabis. I'm also a partner in ArcView Ventures, which is our fund investing in the space. I'm currently fundraising now. Before we continue, I just want to ask, who here is an entrepreneur? Raise your hand, raising capital in the industry. Okay, awesome. And investors that have made an investment in the industry? awesome. It always helps to know who we're talking to, and it seems like we got a really great mix. So very pleased to be here. Thank you.
Great. So why don't we start sort of on the investment side of things? Let's start with one of the bigger questions here, which is ancillary versus plant-touching businesses. Yoni, you mentioned your firm, Casa Verde, focuses mostly on the ancillary side of things. I'm curious to hear from you why you choose ancillary versus plant-touching, and then anyone else, feel free and jump in here. I don't want to ask just questions of one person. Let's keep it sort of more of a discussion. So let's start here.
Yeah, thank you. So the reason we go for ancillary investments is primarily born out of the need for scalability. So when investors come to us, they're looking for exposure to the cannabis theme. When you invest in individual stocks or individual assets, it's kind of hard to have true exposure to a theme. It's just that individual entity. That said, when you look at the ancillary space, the companies are not tethered by requiring huge amounts of cash for CapEx, for licensing, for real estate. So the notion of going from state to state and actually scaling in a pretty quick fashion is actually a possible thing to do on the ancillary side. So in that vein, a couple examples are Greenbits was our point of sale company. Greenbits is currently in 12 states. They've got over 1,000 dispensaries on their platform. Similarly, LeafLink is in 11 states. They've got 2,000 dispensaries and 600 brands. So that's the kind of scale that we're looking for to truly get exposure to the cannabis theme.
I think that's, for all the reasons that Yoni spoke about, that's why you would look at ancillary scalability across state lines. Being able to leap through a very fragmented market is important. One consideration that we've seen many of our investors speak to in regards to ancillary investment is the faster the pace of regulatory change, the greater the risk of competition coming into the industry from established players in particular fields that will be able to come in with resources greater than anyone building from within the cannabis industry would have. So it's a great question and one that is certainly, there's both sides to the issue. But you find yourself investing sometimes in ancillary businesses and thinking, boy, geez, if they just don't change the laws quite fast enough, we're going to have time to build here, and that's an interesting position to be in.
I think if you'd asked that question a couple of years ago, the responses would have been that if you invest in ancillary, you're insulated from any sort of federal prosecution or anything like that. And I think as the industry has evolved, I've seen a lot of funds shift from that ancillary only and be more open. And it's not necessarily the people running the fund, it's their investors. And so I think it was probably just to see how much money was made in Canada got a lot of people interested in not worrying too much about the federal prosecution. But it's really a false dichotomy to think that you can be an ancillary company and somehow be insulated. The fact is you are a money launderer ultimately if you're an ancillary company working with the cannabis industry. So it's one step removed. But I noticed Yoni didn't say that's why they do it. I don't think that's even an issue for you, right?
Yeah, no, I think perhaps directly to your point, a year ago when we're raising our first fund, we're new managers, people are not familiar with the space. Ancillary is, I think, a lot more easier to digest, both from the legal and the scalable point of view. I think the legality issue has kind of gone to the side in terms of, perhaps it's still there, but that's just less of a concern just because of how large the opportunity is. But I still think this scalability is a key differentiation that needs to be considered. And to your earlier point, I think that's definitely a concern around big guys coming in. But so far, at least what we've seen is that when people try to adapt technology from existing industries to cannabis, time and time again, they fall flat on their face because there's a lot of nuance that's tied to cannabis, to compliance, to metric integration, that just because I have a point of sale that does, the Starbucks down the road, that doesn't mean that that point of sale can be used in a dispensary.
I was just going to add that one of the things I usually tell, I get a lot of brand new investors who are really interested in cannabis, and one of the things I usually recommend is that they look at ancillary to start off, just because it's a much easier way to kind of dip your toe in. There's not as much regulation to deal with. And even though it could still be tied to something, it's much less likely you're going to have someone come after you than if you're actually a plant-touching company. So it's a safer way for people to get comfortable with investing in cannabis.
Yeah, John, I mean, ArcView, and I've actually been involved with ArcView from the very beginning. I was at the very first ArcView meeting here in San Francisco, and ArcView started as an ancillary investor network and then made that transition into bringing plant-touching businesses in a few years into its existence. I'd be curious, what were the factors that went into that decision to make the transition? Was it about getting more comfortable with the risks, or was it business related, or both?
Well, it is both, but certainly it's led by being more comfortable with the risks. To Alan's point, investors drive the fund thesis sometimes. If they're not comfortable investing in plant-touching enterprises, you don't want to present those on the stage. I remember my first ArcView in January 2015. There was a palpable feeling like, geez, are the feds going to come in? Like, what's going on? I mean, like, who here is worried about the feds coming in and busting up this show? So it's amazing how fast things have changed in just the last few years. Yeah, okay. That's because you have a cryptocurrency, crossed with cannabis. So. And the other thing too is, I think to Alan's point, I would just make the scalability of financing these transactions vis-a-vis Canada being a home for capital and the capital markets that are available now to go out and aggregate assets across state lines and in fact international borders is significant. So that has completely changed the game, the amount of money that's flown in coming into the industry through Canada, and you'd be a fool to ignore it, and our investors certainly are not ignoring it.
So we'll move on to a trend that we're seeing now in the industry of consolidation, particularly amongst the plant-touching businesses, but not entirely. This is happening, I think, in the ancillary space a bit as well. The way I look at this is I see us in what I'd call the first wave of consolidation, which are some of the multi-state operators that are going in and buying up to the mom and pops, right? We're seeing this with companies like Acreage, MedMen, right? I was going to bring up MedMen. Obviously, the deal yesterday with Farm, and that's a little bit different, right? That wasn't MedMen buying some mom and pops, right? That was MedMen buying PharmaCann, who's a massive company in the space. But by and large, it's the bigger players and multi-state players. And my company, Forefront's engaged in this to a little bit of a lesser degree than some. We're a little more targeted in how we do it, but still, you've got the multi-state players that are going in and sort of buying up a lot of the mom and pops. I think there's going to be a second wave of consolidation that will likely come maybe at the end of Prohibition or right around the end of Prohibition, where you're likely going to have players from outside the cannabis industry, major institutional money, people from, maybe it's alcohol, maybe it's tobacco, right, coming in and buying up the multi-state operators in the space. So I'm curious to hear from you guys, who and when, right? Who are going to be the companies that come in and do the massive consolidation that will happen that will likely happen in the second wave, and when do you anticipate this happening? No particular order.
Yeah, this is right up my alley. I don't know if I have a solid answer, but I can share my thoughts. So Canada is a good place to start to figure out, will there be a ton of consolidation? Canada is obviously 1/9 the size of the United States, and it's federally regulated. There's few licenses, so we have a lot more fragmentation here, but it's a larger market. And in Canada, there has not been that much consolidation. Only a little bit later in the game did you see Aurora Cannabis step up and do some very large transactions, and to simplify it, number 2 bought number 4 and number 5, or something like that, number 3 and number 4. And so that was actually very dynamic for that market, but in the scheme of things, there's not been a lot of consolidation.
That looked more like the MedMen buying PharmaCann deal than the buying up the mom and
MedMen
pops.
buying PharmaCann was a wake-up call yesterday, because what Chris was saying, I thought was the way it was going to be for a while, that we'd see more mom and pop consolidation, and that definitely, as Chris said, was not mom and pop. PharmaCann, a lot of people don't know this, but they had $14 million of revenue in 2017, but they've added a lot more. I don't have anything more common than that, but it's a well-known company, except to people that just don't follow the industry that closely. And, it was a large transaction as well. And so I've been hearing this a lot from the public companies, that they're going to be bigger deals. So this was the first one. I didn't think it would happen this soon, and I guess, once somebody starts doing that, the other people do. And there's some large companies that are still private, like PharmaCann was, and that's probably what it's going to be, instead of company A buying company B and they're both publicly listed. I'd say look for somebody, like Forefront, this is not a rumor, it's a fact. They've said that they're looking to go public. They could just decide, we really like the people at company C. Maybe that's a better way to go forward. I'm sure those conversations happen across the country every day right now. You could probably.
No, I mean, I see a lot. I've seen a lot of conversations among some of the bigger players, and I, in deference to and out of respect for my friends in those companies, I won't mention who, but there have been a lot of conversations along the lines of what happened with MedMen and PharmaCann. I just hadn't seen any come to fruition. The valuation game gets really difficult, right? Because the public company valuations tend to be so much higher by and large than the private company valuations, and how you come to a fair and equitable relative valuation gets to be a really difficult game.
I'm 4x, you're 3x, let's all be happy, or something like
Right,
that.
right. But it's really hard for people to do that at the end of the day. It's like, well, look, if you're going to use this metric to value you, you need to use the same metric to value us. It's like, well, no, we were going to value you this way, right? And that's where it ends up breaking down.
So we were talking earlier about the nuances of the cannabis industry, and this is an important one that makes these types of deals very difficult. You can't own multiple licenses in certain states. I don't know the New York rules, but this could be a problem. MedMen buying PharmaCann, those are two of the license holders there. So we'll learn how that's going to play out. But this is the number one reason why I thought these things might take more time, because each state is different, and if you have multiple licenses, it won't necessarily work.
Well, so let's stay with that then. On the valuation side of things, for those of you who wear your investor hats in this, how do you approach valuing companies? Because we're definitely in an era right now where valuations are not based on traditional metrics, right? There's no way that, I mean, certainly on the public market, but even by and large in the private markets, like there's no way you can justify these valuations based on on performance metrics today, which is fine for an industry that's this young, right? It's based on speculation who you think is ultimately going to win out, much like the early internet boom was based on speculation on who was going to win the internet, right? Ultimately, that bubble burst, but the companies that could execute, could perform, that had real assets, right, had real plans, they survived, right? You hear a lot about the pets.com and companies that died with the internet bubble, but Amazon and Google and Apple and these companies were all around during the bust as well, and they're far better off today than they were back then. So in this era where valuations are based more on speculation than on metrics, how do you approach valuing companies that you're looking to invest in?
I mean, how do we approach valuing companies, or is it about the approach of valuing, or more so on like the discrepancy or the disparity between these valuations in public and private?
Let's start with the former, and then I wanted to hit on the latter anyway. So you can hit on both if you'd like.
Yeah, I mean, I think ultimately we need to see some sort of proof of concept. People right now are just investing in like kind of dreams or what's going to happen, or just give me X dollars and I'm going to build out this facility and then I'm going to sell all this product and you're going to have profit splits off of this. I think there's a myriad of issues that can be coming up in terms of these operations. So, for us, we're just looking for core competency, focused founders. And I think usually, at least in terms of the opportunities that we've seen, these are people that are typically coming from other industries into cannabis. As such, they, I think, just are more so attuned of like how the real world works as opposed to like this little bubble that we're in, where if you're approaching venture capital, you need to understand your numbers and you need to have a real kind of idea of why you're worth that much. So off the bat, I think we're just in a very unique spot of coming in early to these companies where these are reasonable valuations. And that's why we're just so excited about kind of the portfolio that we've built, because Tilray's and canopy growth is where obviously it's eventually going to be going. But I think people are just trying to very much jump the gun and say, like, I just want the exposure. I'm just going to get the name that's in the headline. At the same time, that's just a different approach of kind of a short-term versus long-term approach to the industry.
Yeah, I was just going to say to Yoni's point, exactly what you just said is why it's so hard, I think, for a lot of brand new companies to figure out what to value themselves at when they're raising money, right? Because there is no track record, there is no revenue for a lot of these companies that are at seed stage. What do? They basically, a lot of times you're basically throwing a number out there. I mean, all you can do is look at comparables, and I'm sure you do this, Yoni, when you guys invest. You look at what did other people raise at, and did they actually raise money? If you have 5 companies that raised at a pre-money valuation of $2 million at your same stage, then it can look like it's a fair valuation, but it's not really based on anything.
Well, moreover, I mean, you also start seeing people throw in public comps into private transactions, which just like, what are we really talking about here? Like, yes, Aurora's worth this, so as a function of like you're going to be worth that much money in 2 years if XYZ happens. I mean, it's kind of bonkers.
I mean, Aurora might not be worth that much in 2 years, right? If the bubble bursts.
The next Tilray, that's what everybody keeps asking for, the next Tilray.
The next, well, so that's a good segue, though. I mean, so let's start talking about some of these public sector valuations. Like that's been all the news recently in cannabis is these valuations you're hearing, and it's all been led by Tilray. I mean, I was meeting, we're out doing our own raise that we're closing today, and so we've been meeting with investors and meeting with bankers and whatnot. And everybody wants to talk about Tilray, and like the word on the street is, Tilray is the next Bitcoin, right? And so it's where everyone was, 9 months ago everyone wants to talk Bitcoin, now everybody wants to talk Tilray, but Tilray. And this is not to knock them, right? They've actually done some real work. But Tilray had, I believe, $24 million in revenue last year, something like negative $28 million in net revenue. And as of a couple weeks ago, we're valued at over $22 billion. It's hard to square that circle.
And they just raised $450 million.
Well, I mean, it would almost be malpractice for them to not be raising money at that valuation. Right? But I'd be curious to hear that it's not just Tilray. Tilray is a little bit of an outlier in this, but Canopy has crazy high valuations. Most of these Canadian companies do. Even some would argue, MedMen being valued over $3 billion or GTI being valued at $2.5 billion. Even though these are real companies with real assets and real revenue, the valuations don't match up with revenue. Are we in a real bubble here? Is this bubble going to burst? Is it going to slightly deflate? Where do you think we're at with these valuations? Are we at a risk where Tilray may never see the type of valuation again that they were at just a couple weeks ago?
Yeah, there's limited supply of publicly traded cannabis companies, and there's extraordinary demand. So it's a fundamental law of economics. I mean, it is absolutely a bubble, and if you think of the nature of the hysteria surrounding the folks wanting to jump in right now, and how are we going to support the valuations? I've seen, the Canada is going to be exporting to foreign markets. Well, foreign markets are starting to legalize and starting to allow low-cost production. And so how is Canada going to compete when you start to see GMP facilities coming on in Eastern Europe or in South America? And there are questions about the sustainability of the margins and their ability to export. So, I mean, you hate to be on the spot. Almost every question in finance is like, well, it depends. But like, is there a bubble? Yes, there's a bubble.
I mean, another thing that I think is key of like where things are going and where they're operating, like these are licensed producers. They're cultivating cannabis. In all other industries, the people that are making the money are the CPG players in terms of the finished good.
Yeah, so, it's the brands and distribution, right?
So then my question is to the Tilrays and Cannabis of the world, like, what are your brands and who here has ever heard of any of them? Or, I mean, granted, there are a few that you've heard of, but are those ubiquitous names here by any means?
I mean, Marley Natural is probably the biggest name, right? I mean, it's not really a Tilray brand, but it's a.
But where do you see it in the dispensary?
Well, but in terms of name recognition, right? I mean,
I know, but there's a function of like it's not actually there. There's larger questions of what's going on there. So,
right. I've been following the market for a while. This is not the first time we've seen a quote-unquote bubble. It's the best bubble yet, and I'll tell you why. So, it's exactly what John said. It's as simple as supply and demand. In 2014, all of a sudden, the first time any state in the United States opened the doors to anybody over age 21, and there were a bunch of crappy stocks, and they all went up 10 times. It was incredible. And then, of course, they came down because they couldn't grow into it. And then there have been a couple of other rallies like this, but they're usually catalyst-driven, like the 2016 elections when there was just a lot on the plate, and the media kind of fueled it. And then the next one was the California rally last year. People were excited about California. These things are going to get harder and harder to pull off. Now, what I told my subscribers earlier this year is that this is a different kind of rally. This is not the quick rise and rapid fall. We finally reached an inflection point, so that's behind us. The quality of the companies is better, but if you want to really know what's going on, turn on, I don't know what channel it is here, but in Houston it's 45, CNBC. Just turn it on, and then go back and play from a year ago and see what they were talking about. I can tell you a big difference. They would not talk about cannabis at all. Now it's their favorite thing to talk about. Joe American and Joan American are sitting there watching CNBC, and they're being fed this stuff by Kramer. I like Tim Seymour. He's been good for the industry, and he's doing good stuff. But the downside of this is you have people that are piling into the market, and they're not able to. I mean, this is a great question. So does Canopy Growth have global brands yet? Absolutely not. They've never sold 1 gram of cannabis under a legal, adult use type of regime. It's all been medical, so it's unproven. It's not to say they can't get there. So what we're dealing with now, and you need to be careful as an investor, is realize that these stocks are very expensive. Does it mean they're going to go down? Absolutely not. I said this about Canada for years, that these stocks were too expensive, and my subscribers laughed and kept buying them, and they were right. So here's the answer, I think. So we saw that deal yesterday with MedMen that we were talking about buying PharmaCann. To me, very quickly, being on the road, it looked very accretive and strategically sound and all that. I'd like the chance to review it further with more information. But that's how these stocks are going to do well, even with the high valuations. Two things. One, use their stock prudently to buy up other assets. And two, grow into it. So I don't know if I believe MedMen or not. They pulled these numbers out of the public domain. They were briefly in there. I don't even remember exactly what they were. But this was a company that did like $7 million last year, something really low. And then they're out there telling people they're going to do $500 million. And I know you guys see this all the time. And you were just talking about these companies that we're going to be the next Aurora or what have you, and most of them won't. But the reality is, there is a lot of truth to not necessarily who's going to make that much in revenue and hopefully better cash flow than we've been seeing. Somebody will, though. The industry's headed that way.
Well, so let me put you guys on the spot then. On this MedMen deal, like, is PharmaCann going to regret taking all that money in paper?
What's the lockup?
6 months.
Yeah.
6 months apparently. 6-month lockup.
I wouldn't be concerned for a 6-month lockup.
You would not.
No.
Any differing opinions?
You would not.
I wouldn't be concerned. If the lockup is only 6 months, I don't see MedMen stock
I
tanking
see.
in that period of time.
I don't think we've seen the Coca-Cola of cannabis as far as CPG brands, but I think as far as retail and the ability to create awareness in Joe and Joan America's minds, that MedMen has really set themselves apart. I do think that as a brand that will be sustainable, and they haven't really. I think their stock hasn't really jumped since the IPO extraordinarily, and I think that there's a likelihood that PharmaCann will be very happy that they attach themselves to create a market leader. So I'm gonna go long.
Yeah, I'll take the over, and I've been kind of critical of MedMen to a limited degree, mainly their valuation. It's not their fault. They're very bold. A lot of people like that. Kind of scares me when people go out there and say, we're here now, but we're going to be 20x real soon, but they might. And so I said that there were two ways that these companies with the high valuations could grow out. I left out another one, raising more capital. That's what these Canadian companies have done. I have a running joke that the Canadian LPs have grown their bank balances better than they've grown cannabis. And this is actually not a joke. It's very true. There's huge write-downs in their crops. I mean, failures left and right. They don't get talked about a lot. It's hard. They're scaling up. It's a brand new industry for a lot. And we're going to see that in the United States, too. There's projects out there that are just massive. And, they're unproven at this point.
Yeah, I mean, so you guys raised a couple of good points, and I want to hit on the point that you made about the Canadian companies are mostly banking on being global exporters, and really they're banking on being large-scale producers and exporting from Canada. Now, John, you raised a great point that they may face competition from places where you can grow a lot more cost-effective than you can in Canada. Like, there's a reason why we don't do large-scale commercial. There isn't large-scale commercial agriculture for just about anything but trees in Canada, right? It's cold, it's gray, very high cost of labor, high cost of land. Right? It's not a great place for large-scale commercial agriculture. There may be some real competition from places like Colombia, right, or Mexico, or Macedonia, or North Africa, that are closer to, right, or Bulgaria if they start getting it, right? They're closer to Europe, but you can grow in Macedonia or Bulgaria at the same price you can grow in Colombia. Basically, and you're in Europe with most favored nation status, right? With EU candidate status in some of these countries. So it worries me looking at some of the Canadian valuations that are based largely on them becoming exporters. Where I think some of the Canadian companies are doing right is buying pieces of other companies around the world. Because ultimately, I don't think it's the 1.5 million square feet in Ontario that's going to justify that valuation. It's owning pieces of businesses all around the world that they can roll up when they figure out who the winners are going to be. But they are enjoying these really, really high valuations. And so I'd be curious to get your guys' thoughts on the valuations currently for Canadian companies versus American companies. American companies I tend to see focusing a little bit more on brand development than just on large-scale cultivation, which seems to be the game in Canada. One of my partners, our CFO, Andrew Toot, likes to say, playing for large-scale cultivation is like trying to play the end of alcohol prohibition by being a hop farmer. Right? You don't want to be a hop farmer, right? You want to own the brands, you want to own distribution. I think I personally see more of that out of American companies than out of Canadians. So I'm curious how you guys view the valuations we're seeing for these Canadian companies, which are in the multiples of $billion today, versus American companies, which other than where the highest of the high valuations are 2.5 to maybe $3 billion.
Well, I'll just say that I have said that there will be a bubble in American assets, American cannabis stocks, just as there has been in Canadian. And then the Canadians have come down and started really bringing all of the assets and listing them up north. And so I don't know how much that's kind of muted what I've been saying for about a year. But the other thing to think about is not just where are the stocks listed that have done the best. If you look at the companies like Tilray, and Canopy that have a listing in America, that's where capital is now flowing in. It's easier to buy than it is to set up a brokerage account and buy on the CSE, even if it's really not that technically hard. U.S. listed cannabis companies are seeing big increases in their valuations. So I think that's something to pay attention to as an investor, is the ability of a company to list in America and be mindful of what that might do for their valuation subsequent to U.S. listing.
Yeah, I'm going to just take the other side. I don't think that the business model of these Canadians is to export. Oops. I think what they're trying to do is use export right now to get into the market and get their name in there. But the ultimate game plan is what you were saying, Chris, is to either have assets or pieces of assets around the world and create a global. So I think it's kind of unfortunate for these Canadians that they took the worst of the United States. In the United States, we all know if you want to sell in Oregon, but you're in California, you can't cross the state lines. You have to go replicate, and it's very expensive. So what did Canada do? They had one country, a whole country going legal, but then provincial politics kind of indicated that if you really wanted to sell, you had to go put physical plant in that province. It was like crazy. But I've been dealing with this valuation question about Canada. I've gotten it way wrong. They just keep going up. And I will say they're expensive. And they should be more expensive than the United States. And John just made an excellent point. If you are, let's say, Harborside, if you're Harborside, you can't list on the New York Stock Exchange. And so this is
any American company you can.
What's that?
Any plant-touching American company can.
Right, but if you're a plant-touching Canadian federally legal, you can, and there's more of them coming. And so that's one small point you have to remember, but it goes deeper than that. The federal illegality is you have to factor that in. You may not want to, but you should. And the fact that you truly have this state-to-state problem and it makes scaling inefficient is something else you have to factor in. 280E, the taxation, if you're not familiar with that, that's definitely something that needs to be factored in. But with that said, I've been saying for many months that the political the sentiment shifted in a big way in April, and it's playing out kind of the way I expected. And at that time, the valuations in the United States were just silly low compared to Canada. And dollar for dollar of revenue, or if you want to try to do less negative cash flow to the more negative cash flow in Canada, any way you looked at it, it was insanely low. And I was laughed at a little bit, but this is just, in my opinion, this is just starting to play out. And the reason is, it's as silly as Kramer having GTI on the show. And so people are waking up to the U.S. opportunity. They're playing not the most informed game, because they'll say, well, if Tilray is this, that's not the right comparison. They're not Tilray, and they're never going to be Tilray, and Tilray shouldn't even be Tilray. But I think that, so don't expect the U.S. to catch up in the near term, but there's a very large, I think it's still too large, honestly. And, this company TrueLeaf, and you could look into it and maybe poke some holes into it, because they have to do some acquisitions. But the American public that cares was surprised to learn TrueLeaf is the largest revenue-generating cannabis company in the world that's publicly traded. A lot of words in there, but in other words, they're bigger than Canopy Growth, and nobody knew that.
And they're in one state.
And they're in one state in the United States. Now, with that said, check it next quarter, because they're not going to be the largest anymore after legalization. But the point is the U.S. is way ahead of Canada when it comes to cannabis. The growing experience is better here. The branding, the laws, the rules. In Canada, their whole system is extremely limited. No vape pens, no extracts. Well, they have some extracts, none of the good stuff, and no ingestibles or edibles. So the United States is great. And yesterday I listened to Adrian Sedlin of Candescent admit to what a lot of people won't say publicly, and a lot of people in this room probably, they don't want federal legalization. So people like Chris and his company, everybody's going to make a lot of money just riding the laissez-faire system that we're in now without the federal government inviting in a lot of competition.
I was just going to say, in kind of a corollary to your point about not wanting to be a hop farmer and then waiting for prohibition to end, wanting to be the brand. I've recently been reaching out to a bunch of funds and VCs for an article I'm putting together, asking them about trends. And this is trends of new private companies raising money. And one of the things almost all of them said across the board is they're seeing a huge explosion of brands, of companies that are trying to raise money with branded products. And one of the ways I think that these big public companies, both Canadian and American, could help justify some of those valuations is they start buying up a bunch of those brands.
That's
so
right.
they actually own, they start to own parts of the market that can't be taken away, and they own those brands. So I think you'll start to see that as there's more and more companies, startups that are trying to be brands, you're going to see more and more acquisitions happen as well.
But I think the challenge there is tied to where they're listing. So like the big guys are all listed on TSX, and they're encumbered in terms of actually being able to deploy dollars to the U.S.
Yeah, they can't own U.S. assets.
Whereas that's where the GTIs and MedMens are really carving out this space because they've got access to the capital markets, and then they can actually take that paper and come here and start making acquisitions. So I think you're seeing this now in terms of a lot of these LPs and U.S. companies that are kind of going back and forth of how am I going to be listing. I think that's starting to become a much bigger conversation. And now these other guys, I know for a fact that they're trying to lobby the TSX to change it so that the listing could be the same requirements or disclosures as it for the CSE. Granted, the TSX is owned by all the major banks, so it's unclear if that's ever going to actually happen. But like you can see them really trying to get active, and I think starting to get creative in trying to come here because they do start to realize this is actually where the CPG opportunity is. I think if there's a similar corollary to like, French wine or Italian wine, like all of the brands or the biggest brands, at least in our view, are going to be coming from the US and especially from California. And I think that's what is just kind of only people are starting to kind of get on the same page.
Yeah, you're hitting on something that we've been seeing and kind of predicting as we look at the markets, which are the biggest company names coming out of the U.S. are almost all coming out of the eastern half of the U.S. Right? When we talk about companies like GTI and PharmaCann, who now got bought, but Curaleaf and a number of Cresco, TrueLeave, right? I mean, Forefront, we're East Coast, we're a little bit probably slightly tier below some of those, but getting there. Ianthus, exactly. I mean, the biggest names, the companies that are enjoying the highest valuations, both the public and Columbia Care, right, that are enjoying the highest valuations on the public and private markets tend to be based in the East Coast. But the best brands, right, the most recognizable brands, really tend to be based out here, right? They tend to be California, Colorado, Oregon. So what I think we're going to see, and I'd be curious to see if you guys agree with me, or if there's some sort of nuanced dissension, is these sort of East Coast-based companies that have access to the capital markets and access to these and have these large valuations are likely going to be the acquirers of a lot of these West Coast-based brands. Brands that are gaining their reputation and their notoriety in California and Colorado, but can't get access to the same kind of markets, where they don't build the same kind of buzz in the capital markets. I think it's going to be these companies that we mentioned out of the East Coast that are buying up the brands on the West Coast. I'd be curious if any of you guys have thought about that or disagree.
Even West Coast companies are doing that. MedMen, they
MedMen
took a stake
yes.
in Lowell Smokes, which is a pre-roll company.
Right.
So I think you're starting to see that whether it's East Coast or West Coast, it's all about the brands, and even if you own the stores, if you're in like a limited market, yeah, you're just going to be putting labels on your own product and selling it, and that's what these guys are doing. But they're not under any kind of like outside pressures or real kind of competitive market. That's why I think like the real kind of value is going to be created out of California, and that's also why the Canadians are coming here. You know, when you see Molson Coors or Diageo or Constellation looking at Canada and they want to do beverages, that's great. What beverages are in Canada? Like, it's illegal right now. Whereas if we go to the dispensary down the street, we can find 4 or 5, if not more, different beverages. I think it's a really big edge that we have in terms of like actual bringing products to market, testing, looking at new technologies of how that actually works. And this is the real kind of testing ground for where I think the real value is going to be created.
So one of the things I did hear also from VCs and a bunch of different funds was kind of in relation to what you said, Yoni, is that they're seeing about 2x the amount of companies coming out of California as they are out of anywhere else. And I think it's partly just due to the size of the state, but it's also due to the maturity. I think maturity of the economy is that they're just kind of kicking in. People are just starting to realize the opportunity. So they're not only 2x the number of companies springing up in California, but an explosion of branded companies specifically from California.
Just to add to it, we're seeing some of the California brands, which remember, a lot of these have been around for 5, 10, or even 20 years possibly. They're going public on their own, the California brands up in Canada. We've also seen a Canadian company come into California and buy Jetty Extracts, which I know to be a fairly well-known brand as well. So I think that's an excellent point about the branding being really where it's going to be.
So to stick on the U.S. companies, I got a couple more quick questions here, and I'm going to open up to some audience questions. So we're seeing a big rush of U.S. companies getting listed now, and as you mentioned, I mean, we're in it ourselves. We're looking at this, and when we look at the market, you know, we didn't set out there saying we want to be we didn't set out in this saying we want to be a publicly traded company. But when you look at the valuations that these publicly traded companies are getting, and as a multi-state operator, we kind of look at that and go, if we want to really be competitive here, we feel like we kind of have to go that route. But there's risk there, and I'd be curious to hear what all of your thoughts are on this rush of U.S. companies to get listed, primarily on the CSE. Is it a good idea for so many companies to be going public? Are we going to reach a point of oversaturation where we're going to start seeing companies that are going public and not getting the types of values and types of investment that they think they're going to get because the public sector investors just kind of get tapped out?
I think you hit it on the head there, frankly. There's only so much juice that you can pull out of that market. And if how many different multi-state operators can be listing, and who's really interested in having exposure to Indiana, Illinois, and Pennsylvania, the larger markets that we care about are the New Yorks, the Florida, the California. So I think
watch Illinois.
I feel like the story is just getting a little old, and then once the economy turns, which is inevitable at some point, the cannabis stocks are the ones that are going to be the first to get hit. So I think, obviously, on one side, you need the access to the capital markets, but Tilray did quite fine in terms of staying public for so much longer than everyone else, and then picking their point and going public on the NASDAQ, and you saw how that stock popped. Even though it was not a new idea, there had already been 5 or 6 companies that had already gone public. So I think you might reach a reverse inflection point where people are starting to hold back on actually going public because there could potentially be more value down the road.
Well, one thing that I would note is my thesis is that cannabis is non-market correlated more broadly. And so I would look at cannabis stocks as being more resistant to a downturn. I think if we saw the 1,000-point drop in the Dow a few days ago, there was barely a blip. Cannabis stocks were even. But for every boom, there's a bust. That we know this, and it's going to be in public companies, and it'll be in private companies as well. And so, as an investor looking at the market today, whether you're investing publicly traded companies or if you're looking at buying private assets, the industry is overbuilt, and in many instances, if we're talking public, it's overbought. So there's a point where you might be more savvy to wait on the sidelines and acquire assets on the cheap, because certainly well-capitalized, efficient producers and publicly traded companies will be looking to acquire the less efficient, maybe less capitalized competitors on the public markets. And so there will be a wave of consolidation, and it'll be public and private as well.
So when we started 2017, I think there were 12 publicly traded companies in Canada, which seemed like a lot. There's now 43. and it is a lot. I think the U.S. is so much bigger, and you have to remember a lot of what was fueling the Canadian LP trading was U.S. investors. So you don't want to necessarily multiply. I think it got saturated at 20, to be quite frank. So you don't want to say 9 times 20, we're going to have 180. But I think we're just getting started. And for a firm like yours and many others like it, it's eat or be eaten. And if you have aspirations to really compete, you have to have access to capital. Nobody's going to do the deal with you when they see the exit strategy with MedMen stock or what have you.
Yeah, but the PharmaCann deal is a perfect corollary of them staying public and then getting acquired by, staying private and then getting acquired by a public company.
Right, and we'll almost certainly see more of that, and we'll see more mergers between public companies as well as these continue to grow. All right, last question before I open it up to audience. So everybody might want to pull out their E-Trade or their Fidelity accounts here, because we got some smart people. So I'm going to ask stock tips. Who would you buy and who would you not? Let's go down the list. Come on now, I'm going to put everyone. I know this is a tough one to say in a public
All
forum.
right, well, yeah, I mean, first of all, I'm not a financial advisor, and nothing that I say is financial advice.
Yes,
and we're
nobody
just,
up here is offering
we're just
official
having
financial advice.
Yeah, we're just having fun here, right? So I like producers in truly emerging markets. I've been looking at, and I'm certainly not giving any buy recommendations or sell recommendations, but I think companies that have a thesis like Chiron down in Colombia that are wanting to serve a market, low-cost production, 600 million consumers, and increasingly, liberalizing regulations for the medical market. I think that's really interesting. And so I also, not to give a stock tip, but I would generally be looking at companies that can produce industrial hemp in low-cost jurisdictions as well. So we're going to Hong Kong to throw the first ever Asian cannabis symposium, investment symposium on November 1st, and so ArcView is, and so we're really excited about that. And doing some research for that trip, we start to really look at 50% of the world's hemp comes from China, produced at very low costs. So I would just be looking, thinking ahead at low-cost production jurisdictions.
So I feel very conflicted. I have subscribers that are paying me for this answer, and I don't own a single stock, so I don't know if I should be telling you guys what to buy. That's just because I don't want to conflict. But I also have some clients, I don't want to say their names, so very limited. I will say one company that I think you can take a look at, just generally speaking, look at the industry. Sometimes you'll find a stock that's cheap, but it's cheap for a reason. So figure out what that reason is, and so in the United States, there's the multi-state operators. I'm not going to name the name, but there's one that looks really cheap to me. So I think if you take the time and don't necessarily go with the best-known company. So in Canada as well, everybody knows Aurora, and everybody knows Canopy Growth, of course, and Afria. I don't know if I would say this today, but if I had been here a month ago, especially on August 13th, so two months ago, I would have said CanTrust. And this turned out to be a really good choice, and it's probably still a decent choice. But the point is you can do that relative valuation. There's enough data points right now. But since in the spirit of making it a fun conference, I'll throw this out. I don't have a position in it, a working relationship, or anything. My subscribers know I like it, though. Elixinol is an Australian company, and to me, it's very interesting, and I think they're actually exhibiting here. And they have, so everybody knows Charlotte's Web. It's actually a client of ours, and CV Sciences. These are publicly traded companies that have CBD products. CBD is very hot right now. A lot of scammers out there. You got to be careful. Elixinol, if you just look at the numbers, it's really compelling, if you ask me, because they're in that business. They're number 3, but the valuation's way below those other two. And it's actually a really interesting company that has a play on Australian medical cannabis, which I'm not so sure that's really a big deal, but it could become a big deal. And then they have a hemp food business that's really well known. So that'll be my free tip. Take it for what it's worth.
Well, first of all, I would say that I do read Alan's newsletter every day, so I would probably follow whatever advice he gives, since that's where I get a lot of my that's where I get a lot of my public company news.
You see Elixinol go through the roof here now as we leave here.
But I would say, in terms of trends, I think hemp and CBD type products are something that so many people in the United States still don't understand. People still think CBD gets you high. Like if you're in a state that doesn't have dispensaries and doesn't have THC, people just don't understand CBD at all yet. I think in states where they do, it's starting to get more well known. And one of the things I think is a huge idea that I don't think it exists yet to invest in, though, but is retail CBD in the sense of actually having retail stores that all they sell is CBD. And there's one or two right now in Denver that are amazing. They look kind of like Apple stores. They're very like modern and clean, and they have like 12 shelves. Each shelf is a different kind of brand, and it's all CBD. And I think whoever can figure out how to create a chain of those stores that open up in each city and state, so you almost have like a Starbucks type model. I think whoever does that is going to make a huge amount of money. So I'm voting for an imaginary company that doesn't exist yet.
Definitely not in the stock picking game by any means. That said, I think that like Canopy is probably in a good position with $4 billion to do whatever they want, which I don't think anyone has that position. So by no means is that like the kind of cure-all, but it's certainly like many, many steps further than kind of anyone else that I think could position them for just being super strategic, much more so than even their competitors.
Well, very helpful. So we got about 6 minutes left here, I think, in the panel. So I don't see any mics up there, so I'll walk around and see who we got. I see the first person right here, so I'll walk right up to you with the microphone.
I just wanted to make a comment and see what you guys think, and thank you for all the information. Glad to be here. I come from the East Coast in Maryland, where the industry is about a year old there, and been able to watch it grow from nothing to where it is now. And one of the things I've noticed is that overall branding hasn't mattered at all in Maryland, and that's because the bottles come just plain with the sticker on it, most of them. Up until this point, we haven't seen any type of branding or specific marketing. We know the names of the companies, but we just get whatever strain we want. And the reason is because of the testing that's done in Maryland. You can look on the jar and see the terps, and every single terp that's in there, you know it. And after a month or after 2 months or after 3 months, you start to notice what terps you like, what terps you don't like. And so without the brand identification, you're able to look at a bottle, just the label, and kind of pick by that what you want and what you get. And I think that is something that hasn't been really considered, because testing standards are different in different states. But I think as more companies start testing on that level and more states start requiring testing on that level, it totally changes the game and it levels, the playing field.
Yeah, so they do. I mean, I think it depends on each. It's more so the state kind of regulations, but I think California has some of the most stringent testing regulations. And in terms of all of these markets coming online with recreational markets, they all usually have some level of fairly stringent regulation. I think on the other piece of like the jars that you're seeing in Maryland, for example, I mean, I read your newsletter about like Cresco raising $100 million, and the picture that you have there is a stupid plastic bottle that says Cresta Labs on it, and like that's their branded product, and they're raising $100 million. I think that just kind of like really shines a light of even the players that are at such an advantage. There's no incentive for them to do that, whereas MedMen is in one of the most competitive markets here. So they really do need branded products to be differentiating themselves.
So I have a question on the supply chain side. I guess it might be a picks and shovels. So it's pretty well known, I feel, that like traceability is one of the major issues in the cannabis space. And I guess my question is, if you look at the crypto space with, blockchain and everything like that, there are traceability projects that have pretty insane valuations. And then the one cannabis-specific traceability project that's listed on TSX, I think it's called Blockstrain or something like that, is literally in the tubes. And, it doesn't trade at all, and, the valuations are a little low. And I'm curious maybe if you guys have some commentary or things like that, because, supply chain traceability just seems like such a big issue and why there'd be such a major valuation difference where, yeah, on that front.
So I think I would say I don't think there's issues, frankly. Like, some of these markets have, I think it's a little unknown fact, but in point of fact, cannabis is the most transparent and highly regulated market of any industry, fact. So if there's an issue with the product that's down the street, and assuming Metric is actually online in California, there can be tracing back within a day of where that source comes from and what that bad product is. If you go to pharma, if you go to USDA, these things don't exist whatsoever. We've already had product recalls in California after July 1. I think that's a true testament to where this industry is, and something that people just don't fully appreciate of, like, there is full track and trace, and that's why governments have the comfort in actually starting these programs, because A, it keeps the black market out, and B, that's the source of their tax revenue. If you don't track the plant, there's no way of actually collecting taxes.
All right, we've not heard a female voice yet on this panel, so any women in the audience want to ask a question? Any? All right, back here.
I was just wondering your thoughts about convertible notes and convertible equity for companies that are pre-revenue with regard to kicking that valuation can down the road.
Yeah, I think don't be greedy. So a lot of people are trying to say, oh, I'm going to have an uncapped note. So like just 20% discount to the next round. Ultimately, I think the only investors you're going to be attracting there are just retail people, the same ones that are buying Tilray. Because an astute investor would say, why would I put my capital at risk for the only benefit of 20% discount to what that future thing is? The cap is the real thing that mitigates, like, I get something for taking on this risk.
Hey guys, Zach Darling here with the Hybrid Creative, Chief Eternal Optimist. 3 months ago, my company got acquired by Kush Bottles, and it's been a tremendous change for us, and it's really exciting to be having gone from a privately owned small agency, creative agency, to being a part of this bigger family. And I hear you guys talking a lot about the cannabis public brands, but I'm interested in what some of your thoughts are on some of the actual picks and shovels brands, ancillary brands, supply chain type stuff.
So I'm going to disclose that it's Kushco now. They changed their name. So they're a client of ours, so I just want to make sure that's clear. But I like that company a lot, and I wish there were more like it. We talk about in the public space, ancillary, there just aren't that many companies that have revenue, high quality management, and growth, and using their stock to do smart things like buying Zach's company. So I hope to see more of that. I know you guys see it in the private. There's plenty of private companies, but in Canada and the United States, maybe it's too much of the dumb retail investor that just wants to buy the plant touching because they can relate to that more. But I think, Vivian Azer at Cowan and Company only covers one U.S. company. It's Kushco, and I think that says something.
Yeah, I think there still is deficiencies of, like, ultimately they're a packaging provider and many other things, but they're not doing branding themselves. So I think that still, well, maybe you, but like in terms of me going to Kushco and I'm buying 5 different types of pop tops or the same bottles that Cresco is using on, in their stores. So, huh?
They're distributing hydrocarbons now.
Yeah, but I think his question was tied to the branding piece.
I know the legality and consumption lounges are a little spotty in different markets, but what are your guys' take on investing into the consumption lounge brand markets, if there is one coming up yet?
I'd like to invest my time in a consumption lounge, no doubt. Yeah, I think that, that's what we see now is, especially if you even look at the broader capital markets, you have a lot of cultivation plays that have been funded, and now it's going to branding and retail, and consumption lounges is an extension of that trend where you have that interaction with the consumer. So I think that, in markets where it is legal and can be legal, that it's something that that people want, especially in tourist markets where you cannot be in a hotel. and consume. So it's certainly something to look at, but like real estate, it's all local.
Hi. I was interested in hearing your thoughts on a theory that I have about the lack of cannabis taxes that have been collected by the state of California. They were shorted over 30 million from their projections over the first two cycles, the two tax cycles. A lot of articles are discussing things like the black market, and I find that to be rather silly, considering the black market had existed for decades before they started to do their projections. And so my feeling is that it's a lack of tax compliance that's actually leading towards a lack of revenues, and I'm interested to hear what you guys think about that.
I think there's two pieces. One is just the tax collection piece, which is the function of that metric actually isn't up and running yet. So I think that's a big portion of it. And then relative to where they've set the actual effective tax rates, makes it, almost double the cost of what's listed on the actual, the retail price. So as such, your average consumer is saying, I'm going to just go to the black market because there's no tax and the eighth costs $30 or $35 versus the same eighth costs $60 at the dispensary. So I think you will see, and we've seen this in many other states, including Oregon, Washington, Colorado, where as the market kind of matures and it's like the regulated market, they're eventually achieve some sort of equilibrium relative to the tax rate. So typically they'll set it way too high, the tax revenue won't actually meet what the projections are, and then they go back and say, okay, let's turn down the tax rates, and then that kind of eventually leads to that equilibrium.
The California change at the beginning of the year was very unusual, and so they had a period where you could push some inventory through, but a lot of people weren't able to, and then that was pretty much it. So there have been huge shortages. So the white market has been at a disadvantage, and I don't know how that impacts the tax projections, but every company that I follow has complained that their sales were really negatively impacted because they couldn't get product, and that was temporary.
So I think we're about out of time. If anyone has time for one more question, maybe. We already asked one, so we go to let's go over here. Is not, and I think this will be our last one.
How do you guys think about investing in distribution companies and brands with their own distribution network that they've already built out? How are you guys thinking about that in terms of investing?
For the brands that have their own distribution company, I think it's a good question, and we're seeing that time and time again. I think ultimately it's a function of how good are they at actually running a distribution operation, which is very different than running a brand. So from the onset, it's kind of born out of necessity because who can sell their own products better than themselves? But as the market has slowly and rapidly matured, I think a lot of brands, even the very big and successful ones that we all know here, are starting to reassess if they should be bringing in distribution partners to actually kind of have core competencies along the way versus trying to do everything themselves.
In the public markets, there aren't that many data points yet. Canna Royalty will be one to watch, and it'll be really interesting. They've suggested, I think, that the margins will be 20%. If that's true, that's going to be much better than a typical distribution business where the margins can be 2 to 6%. So I think that'll be interesting. I've heard of another California distributor, not just California, that's going public. So I think that's something to be determined once we see the numbers.
All right. Well, thank you to the panel. Thank you all for coming out today. It's been a great discussion. Thanks, everybody.